New tax brackets for 2025 are coming out. We don't know exactly what they're going to be, but just reading a tax blog who I follow for many years, and they project that the standard deduction for married filing jointly will go up to $30,000 from $29,200. So that's an increase in $800. And then for standard deduction for single people, will go to $15,000 from I think it was $14,600. Still the same, if you're over 65, the same bonuses, $1,500, I think, I can't remember off the top of my head, kick in. So your standard deduction, if you're over 65, is higher than those two. All right, so what that means is basically you're looking at almost $130,000 a year of AGI for married couples before you're in the 22% tax bracket. I mean, that's a lot of freaking wiggle room, dude. You know what I'm saying? We have a very progressive tax system. And very few people pay much in federal income tax in terms of what you think. They just don't. And look, I'm just telling you, it's just a fact. Now, does that mean we should pay more? Not necessarily, of course. But the biggest tax most people pay is FICA tax, 7.65. Anyway, so this gives you a lot of wiggle room if you're, let's say you're not on Obamacare, all right? You're not on Obamacare. You're like, man, I got, I don't know, $80,000 of gross income. You got another $50,000 you can play with, Roth conversions or, gifting, all kinds of things that pay tax at the 12% tax bracket, and basically reduce that by half if you're single. And that just gives you a lot of flexibility there, man. So let's say you're 60 years old, you get $80,000 of a pension, you and your wife, from the federal government, the military, something like that. And you got all this money in a TSP or a 401k, whatever. You know what I'm saying? You're like, all right. And you're like, man, I'm going to get hammered from RMDs. I'm going to get hammered for, if I die, my wife is left as a widow. This is a time to start thinking about that. Now, if you're on Obamacare, it's different because Obamacare is, your premiums on Obamacare are based on your AGI. All right, so we don't want to ramp up your AGI to lose Obamacare premium credits. It doesn't make sense. I mean, some of those premium credits, dude, are worth $20,000 a year. You see what I'm saying? So it's just, we never had to deal with this before. What's an ambulance doing over here? We never had to deal with this before. We got people pick up Trump. We got Trump sound right there. We got the support unit. Not sure what he's doing. Milton Fire and Rescue. All right. Gotcha. Pick up some dirt over here with a Trump sign. All right. Good job, boys. Boys and their toys. Anyway, so you got a lot of room to work here, man, and I would highly tell you to take advantage of that. Now, just because you have a lot of room to maneuver doesn't mean you should. I just want to be very, very clear there. I tell you, a lot of the clients I deal with, I say it just doesn't make sense. The tax hit that you're going to get hit with now is comparable to the tax hit you'll get hit in the future. And so if that's the case, and other extenuating circumstances, sometimes it just doesn't make sense to take the tax now. And I'm a hypocrite on this, man. I took all the tax now. I said, I'm done. I'm done paying the tax. And I got smashed for the last 3 years. It freaking sucked, dude. Wiped away all my cash. It sucked. But now I don't have to worry about it again. My goal, as I always say, is I want to be poor on paper. I want to be in poverty according to tax forms when I retire. So I'll be living off the proceeds of selling my house when I downsize. I'll live off the proceeds of my brokerage account, which is all on VT. Dude, what are you doing? You're out in the middle. What are you doing? Oh, never mind. People are walking. Okay, my fault, dude, my fault. I'll be living off the proceeds of my brokerage account, my Roth, and the proceeds on my house, which will be my brokerage account. And I'll be freaking, and then Social Security. Basically, when I stop working, I'll be tax-free for the rest of my life. And now you can make an argument, well, the spreadsheet says this, that, the other. That's fine. I get it, 100%. There's more to just life than a spreadsheet, though, man. You see what I'm saying? So it's like I was talking to a guy yesterday. He's going to convert. He's got $2.2 million in his IRA. He's going to convert the whole doggone thing. I think he's 61, 62. 2.2 is going to convert. It's going to cost him $875,000 in tax. We ran the models, all right, and basically converting, I think he's 61. I can't remember how old his wife is. We're up to the same age. We ran the models, and converting will end up netting him $750,000 less in total taxes paid. $750,000 less, all right? And he'll end up leaving, I don't know, I think it was like 100, I can't remember. He's going to leave a little bit more to his kids anyway, but that more will be tax-free as opposed to potentially taxable if you didn't do the massive Roth conversion. So in that case, it makes sense. He's like, all right, I'm going to pay $750,000 less in tax. I'm leaving more to my children, and the more that I'm leaving to my children will be tax-free. Maybe he was leaving $1 million. I think he was leaving $1 million more too. He's got a pretty sizable net worth, this guy. So he's leaving $1 million, I think, to his kids tax-free. I can't remember off the top of my head, but be that as it may. And he has he's got all this money sitting in cash to pay the tax. All right. So if you had to pay the tax from your IRA, it wouldn't have made any sense. We ran both. But if you just paid the tax from your IRA, it didn't make sense. It's basically coming out even Steven. That doesn't make sense. So because he has a bunch of cash sitting on the side, he's like, yeah, let's just convert the whole thing and use that cash. So the point being is that cash is only giving him a 3% rate of return essentially projected. His portfolio, I think, is getting 5.2 or something like that. And as such, he's reducing his 3% projected rate of return and increasing his 5.2, and that makes sense. If you decrease your 5.2 and you just put in a Roth, it's just a wash, man. I don't know if this makes any sense, but you just got to run these numbers. Does it make sense to do this stuff? And in this guy's case, it did. And, he's going to have to stroke a big fat check, but he was comfortable doing that, man. And then he will never have to stroke that big fat check again. He'll never be living tax-free because he has a pension, but he'll be living in the low 5 figures of taxes comparative. If he did not do this Roth conversion, he'd be looking at certainly 6 figures of taxes once RMDs kick in. Anyway, so, all right. There's your new tax standards and tables, most likely for 2025, based on, I think they used a 2.9% wage increase or CPI increase. I can't remember exactly what they used, but basically whatever. It wasn't the CPI, it was the chain CPI, something like that. But that seems reasonable to me. So you're looking at basically $30,000 standard deduction for a married couple filing jointly, $15,000 for single people, and if you're over the age of 65, you're still going to get that bonus. I can't remember exactly how much it was, but still a small bonus. All right, God bless. Love you, thoughts.